the EMIs. All EMI customers of banks are not the same, and that's because the latest data tells us that as far as EMI defaults go, 10% of people who pay EMIs default consistently. That's the data that's emerging, and Karthik, that's a telling data that 10% of those who have to pay EMIs, any kind of EMI, this is overall broadly housing loan, personal loan, car loan, whatever.
True.
If 10 people, if 100 people were to, be paying EMIs, at least 10 of them are defaulting on their monthly EMI installments. That's the official data.
Yeah, Krishna. So this is definitely a telling sign, a partly worrying sign. And I will not read too much into it because the number is 10%, but these 10% are not typically what we refer to as NPAs. So even within these 10%, a large chunk is delayed in honoring the EMI commitment, and many of them are not able to put up the exact required amount, but they are able to pay the EMI amount partly. So I would get some assurance in realizing that these are people who are willing to pay EMIs, but what is worrying is that they may not have the means right now to honor their commitments on EMI. So it's a telling sign of the state that the common man, the citizen, is in. Despite great numbers on macros when we talk about GDP growth, or when we talk about the current account deficit, or when we talk about overall the India shining story, Indian banks being recession proof, Indian economy being recession proof, bulletproof, etc. So these are great headlines that we take to market and rejoice in the glory of every day. But I think deep down, the middle class who is credit worthy has gone ahead and taken a loan. 1 out of 10 from each of those, while they are willing to pay, are unable to honor their commitments. And that is a sign that tells us that perhaps it's time to relook at economic data and see, is money really coming into the hands of the consumers? Now, this needs to be relooked at either by way of easier taxation, by way of unemployment being under check. Yesterday, 2 days ago, I think we did a story on how 11,000 people have been laid off in India's startup and IT space alone, right? And these numbers, while in the percentage stage, we are looking at single-digit unemployment rate, right? But the problem obviously is there. It's about unemployment, layoffs, reduced salaries, high interest rates. So to tame inflation, and inflation was of course skyrocketing, so to hammer it down, RBI has done 11 successive rounds of rate hikes, which would have had a direct impact on anybody who's taken a loan anytime during these rate hike cycles, or even after the rates were paused 2 months ago and continue to be paused. The kind of home loan rates and auto loan rates and personal loan rates you're getting today are at a much higher rate than what they were available a year, 14, 15 months ago. So the challenge is definitely there in the income in the hands of the consumers, inflation eating away a good chunk of that, tax eating away a good chunk of that, and not enough left in the hands of the common man to make ends meet and honor the commitments of EMIs. While the willingness is there, which is reflecting in the way partial payments or delayed payments are coming to banks. So they're not running away from their responsibility, they just don't have the means to pay.
It's a cash flow problem, Rakesh, isn't it? There is not enough cash flowing into the hands of people, of consumers. Great headlines, great optimism, but it's all about the sikka in your hand, and and in that sense, Karthik is making a very valid point. You were forced to take loans because of the way situation was. You took loans, you want to pay EMIs, but you can't. 10% EMI default at a time when people are willing to make partial payments is a very telling sign, isn't it, Rakeshji?
Yeah, I think I would tend to agree with Karthik. There is obviously distress at the micro level. Contrast this 10% with the dramatic fall in the corporate NPLs. So, that tells us the story, how it's panning out on the ground. So to my mind, 3 pieces. One is that there is distress partly because of inflation data, which may not reflect exactly in the, RBI data. on-ground inflation, I call it. And then second is that interest rates have been very high, and there's a pause. But before that, Karthik rightly pointed out, there's been to my mind, an undue spree to raise it repeatedly just to play safe on the inflation piece. So it cuts the borrower twice. But I would add a couple of more legs to it, Krishna. The second piece is that the borrower of today, barring the one who is a government employee and has a certain sense of fiscal discipline, the borrower of today, especially the youngsters, I'm not castigating, I'm not casting any aspersion on them, but it's a fact that they're a little indisciplined when it comes to, looking at how to manage their what we call the fiscal cycle. So that amount of little indiscipline, partly because they have less cash, partly also because they're not adhering to that timeline that is prescribed in the the borrowing cycle. And the banks are like sharks. The moment you miss the timeline, they start pounding you with heavier and higher interest rates. So that's part two. So some amount of education on making the borrower a little more disciplined when it comes to meeting the payment cycle. And lastly, I think that's also very, very important. I don't know whether Karthik and you will agree. There is no entry barrier to pick up a credit card or a debit card, because the bank employees at the bottom have these huge targets. And so they disperse these not necessarily with all the right due diligence. So you might be armed with a debit card and a credit card, but don't have the financial wherewithal to actually service it, and you keep on buying, you get into a debt cycle and are not able to service it. So some tightening of the norms when you issue debit cards and credit cards. There are stated terms and conditions, there's an SOP, but I do believe that, and I've seen it happening with people in the environment, anecdotally, where it is finally comes through because the bank sales guy or the manager is pushing certain numbers. He's not looking at exactly the financial health of the borrower when it comes about. Unless and until it's like a housing loan of, say, 20 lakhs and above, then the CIBIL scores, come in. I don't think at entry level, bank accounts, someone is really putting in the effort to do a CIBIL check. And if it is happening, then I would be happy to be corrected.
Right. So in that sense, there needs to be rationalization, Karthik, isn't it? Both from the lender's end and the borrower's end, in terms of what is the loans that need to be taken, and what are the EMIs that need to be serviced. But Rakeshji, every time I hear stories about the great macros of India, I always want to know the per capita version of those macros. GDP is great. What is the per capita GDP? Everything, if you boil it down to the per capita, and then you get the real picture of what exactly is going on in the economy. And we'll be doing that here on Business Plus as well. But time now to move on away from that story to a couple of big stories that I'm sure has been flooding your timelines.
Before you move to the other story, I mean, there is a ground fact which is not disputed by anyone, including by the likes of Professor Arun Kumar, who we hold in deep respect, that from 2009 to 2018, we have lifted about 41 crore people from the lines of poverty. So it's not just this government, it's the earlier government as well. So let's not, it's a tedious, remember that we inherited poverty as a virtue, and our socialistic structure made it, even a bigger virtue. We
also
really
inherited virtues like Aaj Nakad Kal Udhar. We seem to have really, given that the boot and gone to the credit card department of every single bank available. So, what we inherited is one thing, and what we're going through today is one thing, and how we're going to go through it in the future is another thing. When I read a headline like 10% EMI defaults, I can't help but be concerned. And it cannot clearly be only because the youngsters are taking the wrong kind of loans. There's a larger systemic issue over here. I'm sure some youngsters out there are taking the wrong kind of loans and not being financially disciplined.
It's a matter of distress. It shows ground level distress,
yes,
which may not reflect in the macros.
True, very true.
And specifically on credit cards, you've got a valid point. Credit card bankers, those guys
who gets these
in the malls, outside offices, at airports, who are thrusting credit cards and credit card forms in your hands, they've also got a target. And why have they got a target? Because their department has a target, because the bank has a target to sell X number of credit cards every month, every day, every week, every year, because 50 to, I think the number is almost 60%, 58, 59% of income for credit card issuers is by way of interests on defaults. So they are in a way trying to sell defaults to make money. So, you're right, it is a systemic problem
and it's a
and
great
the
lesson,
lure of easy money.
And a great lesson to all the youngsters watching this: don't fall into traps like that. I have refused credit cards, when they came to me saying that I can't afford this. I really will not be able to service if I were to take money on this credit card. So, once upon a time, there was no easy access to credit. Today, there is so much easy access to credit. I think it's really upon the borrower to ensure that you take that access only when you know that you can service that credit eventually. It's a very important lesson, as I said, both for borrowers and for those helping us borrow as well.